Dear learners, welcome to a fascinating and more interesting topic in this session. As we have already seen the benefits of forecasting for every business, let us now go one level deeper and understand the different methods of forecasting used in real business situations. In this session, we will focus on how companies like our laptop business use different forecasting approaches to plan demand more effectively. Broadly, forecasting is divided into two major parts. The first is qualitative forecasting methods, and the second is quantitative forecasting methods. Now let us look at each of these in detail. Let us start with qualitative forecasting models. Qualitative forecasting methods are subjective in nature. They rely heavily on judgment, expert opinions, intuition, experience, and market understanding, rather than numbers. These methods do not involve mathematical or statistical calculations. They are mainly used when historical data is limited, unreliable, or not expected to repeat in the future. For example, if our company is planning to launch a new high-end gaming laptop, we do not have past sales data for this exact model. In such cases, qualitative forecasting becomes very important. Now let us explore different methods of qualitative forecasting models. The first qualitative method is the Delphi method. In the Delphi method, a small group of experts is selected. These experts may include product managers, senior sales leaders, marketing experts, and technology specialists. Each expert gives their opinion individually about future demand. These opinions are then compiled and refined to arrive at a final forecast. For example, while forecasting demand for a new gaming laptop, experts may share insights based on gaming trends, processor roadmaps, customer feedback, and competitor launches. One key highlight of this method is freedom of expression, because experts are interviewed separately and do not feel peer pressure. Another advantage is that although this is a qualitative method, the final output can still be analyzed quantitatively. The Delphi method is useful for predicting demand trends, identifying risks, and planning new product introductions. The next qualitative forecasting method is the market survey method. In this method, companies directly interact with potential customers to understand their buying intentions. For example, before launching a high-end gaming laptop, our company may conduct surveys asking customers whether they prefer longer battery life, lighter weight, or advanced gaming features. These inputs help estimate demand and also improve product design. Market surveys can be done through questionnaires, interviews, focus groups, or online polls, either by internal teams or third-party research agencies. This method helps estimate market size, understand customer needs, identify new markets, and even find reasons behind declining sales. The market research model can be used before the launch of a new product or service, or even once a product or service has been launched, to find out if it's been accepted, or even as a continuous plan that will help businesses get information about their market standing. The next qualitative method is the Salesforce composite method. In this method, each salesperson forecasts demand for their own region. These regional forecasts are then reviewed and aggregated into a company-level forecast. For example, sales teams in North America may predict higher demand for gaming laptops, while Asia-Pacific teams may expect more demand for business laptops. Since salespeople interact with customers daily, they often have strong insights into customer behavior, promotions, and competitive moves. This method is especially useful for short-term forecasts, new promotions, or new product launches. It is easy to implement and provides realistic, ground-level demand inputs. The next qualitative forecasting method is the executive opinion method, also known as the jury of executive opinion. In this approach, senior leaders or executives from different functions like sales, finance, manufacturing, and operations come together to give their individual demand estimates. These estimates are then consolidated into a final forecast. For example, while planning demand for the next year's gaming laptop portfolio, executives may consider market growth, pricing strategy, capacity constraints, and profitability targets. This method is fast and low cost, and it creates strong ownership among leaders. However, it may suffer from bias or groupthink, so it is best used along with quantitative methods.